What up, guys? Sorry about the delay. Hopefully, everybody is doing well. I want to talk to you today about the ongoing issue of affordability, right? Affordability is an issue with a lot of folks that are looking to buy uh, this past year and then really going forward, right? There's a lot of things that folks are dealing with. You're right, challenges as far as purchase prices, as far as interest rates, things of that nature. So, what we want to do, what I want to do going forward, you guys know the problems. we got all the problems down, right? We want to talk more about solutions because home ownership is very important, especially for the layperson, the average people like myself. If you're not average, not talking to you, no disrespect. Shout out to you. You know, money ain't a problem for you. But for average folks like us that want to get on the property ladder, those things, interest rates, home prices are very important. Okay. They affect us wanting to do that, right? So without further ado, I'm going to talk about two loan products that have been around for a couple of months now. You know me, I like to let things season. I like to let it simmer and cook. Make sure that it's actually a benefit for those of you that I get an opportunity to speak to before I come before you and just, show up and throw up. We don't make money off of YouTube subscriptions and things of that nature around here. We actually, we're in the business. So I've let it simmer. And these two products that I'm about to go over with you really believe are going to be beneficial for you. Okay. Really believe that. So, without further ado, let's do this. Let's go ahead and get into the presentation. And as always, if you have any questions, comments, or, concerns, please type them in on whatever platform you're watching. Let's get into it. So, affordable home loan solutions is the topic of the presentation, right? And so the first one that I want to speak to you about is it's called the One Plus, right? One Plus. And we're going to go over some benefits from a 10,000 foot view, as well as some of the limitations, because we want to be balanced. Everything is not, just lovely, lilacs and lollipops. There's always pros and cons with everything. That way you're educated and then you're equipped to make the proper decision if you want to move forward. Sound good? Let's go. So first of all, OnePlus is a product that solves or tries to solve a couple of those variables that I aforementioned. Not purchase price, nothing that we could do there. There's really an imbalance with willing and able folks wanting to buy and the availability of supply homes that they can buy. That's something that this doesn't address, but it addresses affordability in a couple of ways. It helps with down payment and or closing costs, okay? And then it helps with some of the monthly mechanics that are under the hood, if you will, that aren't as talked about in the general public. But for those of us that are in the business, things such as mortgage insurance. There's a discounted cost for mortgage insurance, right? So here we go. If you are a first-time home buyer, and that's who these programs are really designed for. Let's define that. First-time home buyer is anyone who not had ownership interest in the most recent 3 years. And in some cases, if you're being divorced and a couple of other variables, you might be able to fall within that first-time home buyer definition. But for this purpose, 10,000 foot view, haven't had ownership interest in the most recent 3 years. This program offers a grant of 2%, okay? Meaning you would only have to come up with the 1% of the down payment. And the minimum down payment for this product is 3%. The down payment is 3%. And so you get a grant for 2. So one of the largest hurdles, down payment, is what it is with most people. Can't come up with those money. So this solves that, right? So there's a 2% grant. There's no time limits or anything of that nature. That money is free. It goes away. Okay. So now, if you're someone who has saved up some money, because over here, we don't advise anybody going out to look for a home and you have no money saved. Just a monumental waste of time, or you need too many things to fall in your favor. Now, if you have a gift or something of that nature, that's different. But if you don't have any monies, that's the first hurdle that you need to address yourself. But this is assuming you guys have saved some money, and now you get an opportunity to get 2% of that money back to you. Okay. Now, before I go any further, there is a $350,000 maximum purchase price. That's down in the limitations. Okay. So keep that in mind. 350, 2%, it's about $7,000. Okay. $7,000. Let's pull out the calculator. So if we're talking about a $350,000 home, 3% down payment, 10.5. Okay. We're talking about a $350,000 home, 2% grant, 7,000. Okay. So 10.5 minus, okay, 7,000 equals 3,500. So out of that 10.5, 3,500 is what you would be responsible for the down payment. Well, what does that mean? Well, what that means is now you have an additional $7,000 to help you with the closing cost. Okay. Great program. Great program. Not a lot of people talking about it because everybody wants to talk about the skies falling, right? But those of you that want to get on the property ladder, you're looking for solutions. Here's a great one. Now, this is a conventional loan. Okay. And the next feature, in my point of view, that is excellent for you as a potential home buyer is that there's lender paid mortgage insurance, or PMI, private mortgage insurance. If you've been looking to buy a home, I'm sure you've probably watched a video or something and everybody's lamenting about how private mortgage insurance or mortgage insurance protection from an FHA standpoint is the devil, right? That's money that you got to pay for. But no one looks at it from a different viewpoint in that insurance allows folks that have not 20% or more to put down for down payment and closing costs. It allows you to get on the property ladder. But in this case, there is private mortgage insurance, but the lender is paying for it. So what does that mean? How does that translate? Well, your monthly payment is going to be that much less because you're not paying for the private mortgage insurance. Yeah. So 2% grant, free money. Don't have to pay it back. It opens up, okay, if you're that person that has the 10.5, now you got $7,000 to deal with the closing costs. And in most of the country, because we live nationwide, in most of the country, you should be able to get into that property with that $7,000. Okay. Now, we're not talking about any seller concessions or anything of that nature. I won't go too deep into the weeds, but that's extra. That's lagniappe. Okay. That's lagniappe, right? So this solves the problem of affordability. I don't know if anybody's watching, but if anybody's watching and this makes sense, right? Let me know, man. Put a thumb sign, a one, or a thumbs up if you can hear me and if this makes sense. I'm not going to belabor the point. It just helps us move forward. Okay. So if you could do that for me, it looks like we're live here. Okay. I'll keep going. So now, there is no first-time home buyer requirement for the 1+ program. That's awesome, right? Because most down payment assistance programs do require that you have that you are a first-time home buyer. Okay. And you know what? Did I overspeak? Did I? You know what? I'm mixing myself up. This program, let me digress. I said earlier, I think I might have said you cannot have had ownership interest in a property in the most recent 3 years, first-time home buyer. I digress. Okay. I digress. That's not this program. That's the one I'm going to talk to you here in a minute. But the 1+, you don't have to be a first-time home buyer. Okay. So there's no first-time home buyer requirement here. Okay. And there's no geographic limitations either. So it's anywhere in these United States as long as the purchase price doesn't exceed $350,000. That's the cap. That's the limit. Okay. All right. Now, as we move forward, you can have a non-occupying co-borrower help you if that's the case. There's certain structure and certain criteria that needs to be met. But the biggest is this: if you have a non-occupant co-borrower, the max loan to value is 95%. So if you're getting 2%, you putting 1 down, we got 5 minus 2. That means you got to have the 3. But why would somebody use a non-occupant co-borrower? Maybe we need some additional monies to help you qualify. Okay, that's an option, because the deal is you got to get on the property ladder. Got to get on the property ladder, right? So now, moving forward, there's no minimum client contribution, because this is for single family resident only, owner occupied properties. No duplexes or anything of that nature, okay? You got to be living in it. It's got to be your primary residence, okay? But there's no minimum contribution, meaning that you can get the other funds from a qualified source, right? Now, technically, you possibly can do a down payment assistance, but most of the down payment assistance programs that I'm seeing aren't going to work, because it's got to be a full second where the interest rate is different if there's an interest rate. And if so, you can do a combined loan to value up to 105%. But very rarely, I don't have any DPA programs that fit that scope. So I'm going to say no down payment assistance. I think up in Detroit, there's a program that fits this, but pretty much everywhere else, we'll say no DPA, no down payment assistance. Okay. Again, there's no first time home buyer requirement. I have to correct myself. I said that there was initially, there's not for this 1+. Okay. Now you can be vacating one property and moving into a new property. Okay. And as long as the new property doesn't exceed $350,000 and you meet all the other requirements, and the new property is going to be your primary residence, you can keep the other property. You can own one additional property. Okay. So that's another plus. Okay. Manufactured homes, if they meet the criteria, are eligible. The maximum loan to value is 95% again. Okay. Now, border income. This is something that I'm going to do a more in-depth video on, but a lot of people don't take advantage of it. And the reason being, in my professional opinion, is this: they don't have the documentation set up properly. And typically, that's the problem in most cases. The documentation is not right. Okay. So when the documentation is not right, we can't do certain things. So bottom line, here's the deal with border income. And this might help, because you might not have a co-signer, but Big Mama might be living with you. You know, abuela, Mimi, Mama. You might have, there's a lot of situations where you have a grown-up living with you and they might be contributing to the household. Well, how can you take advantage of that in a higher purchase price environment where affordability is an issue? I'm glad you asked. It's border income. And the 10,000 foot is this. The reason a lot of folks can't use it is because we can't document the monthly contribution, whatever that is. Let's say it's $1,000. If somebody's living with you, an adult, and they're contributing to the household, deposit that money in the bank. Got to have a 12-month history. Okay. Cancel check, 12-month history. And then that person needs to have proof that they're living there, right? Easiest way to do it is put the address on their driver's license. Do they have a utility bill or something? But better yet, the driver's license is the best way to do it. So now if that's the case, okay, after we get that 12-month history, average it over 12, divided by 12, whatever that is. So if it's $1,000, that's $1,000 a month. Okay. Let's say you're making $5,000 a month. Okay. We could take up to 30%, or as long as it doesn't exceed 30%. So what's that? So if your gross is $5,000 a month, 30%, $1,500. Okay. The average income from the board is $1,000. Well, there's another $1,000 that we could use to help you qualify. See, team matters. Team matters. You guys need to reach out if you're looking to purchase anywhere in these United States, and let's have a consultation. That's the first place. First place is a conversation. But border income, okay? That's why these programs are awesome. Everybody's talking about the sky is falling, and you're missing potentially an opportunity to get on the property ladder, because while inventory is low, interest rates have been coming down. They're not in the 8s anymore. Actually, for a well-qualified person, you can actually get in the 6s today. But you don't hear that, right? Because, we gravitate towards negativity. I digress. But if you implement and understand these products, there's an awesome opportunity, because a lot of folks are still rate sensitive, and they're really waiting on rates to get down into the fives, right? Once rates get down into the fives, not only are you going to be competing with those other folks that are looking to get their first property, but these investors are going to start coming back in the fray. And I hate to say it, but it's going to be just like it was a couple of years ago when rates were real, real low, and the homes that are available, the prices are going to go up again. So in this environment, is actually an opportunity for you to secure the property and then reposition yourself when that time comes available. And if you're not looking, before I move forward, if you're not looking to live in a home 10 years, then this is not we're not in Vegas and we're not gambling. I'm talking to folks that are looking for the utility of a home, right? Or at best, if you want to invest or be an investor, you're a younger person, duplex, triplex, or fourplex. But with the one plus, it's got to be a single family residence. Okay. But hold what you got. Got something for you coming here. Let me move forward. So 620 is the minimum middle score of whoever's on the application. Okay. Now I'm going to go over the limitations. I kind of interchanged as I was going through. I kind of went back and forth, but you must, with this program, you must, okay, you must be at or below 80% of the area median income. Okay. That's how I got it mixed up earlier. So there is no first time home buyer requirement here, but the income, okay, is capped at 80% of the area median income of where you are, right? Anywhere in these United States. Max loan amount or purchase price is $350,000. It must be a single family residence, owner occupied only, okay? And then if everybody that's buying on the application is a first-time home buyer, then home buyer education is required. I think home buyer education should be done if you've never bought a home, or if it's been a while since you bought, doesn't hurt, right? But it's a requirement. If someone is not a first-time home buyer by definition, okay? Because remember, with this one, you could be moving out of a property, and as long as the house that you're buying is the primary residence and subject to this deal, then you're good to go. No first-time home buyer requirements, right? Now, as we move forward, I mentioned, well, how would you know? How do you find out if you're at 80% or below the area median income? It's the Fannie Mae Area Median Income Tool, okay? Government entity, or GSC, government-sponsored entity. It's a tool. It's not proprietary to anybody. You could Google that. You simply type in the address of where it is that you're looking to buy, and it'll tell you what the 80% is, okay? Now, you want to reach out. You want to reach out to your lender to make sure that you're good there, because they're, on a conventional loan, depending on what state you're in, right? Regardless of what state you're in this standpoint, we only have to use the income that's on the application. So I'll just leave it there. But once you find the home and you say, okay, I have an idea of what 80% of the area median income is in this area that I'm looking to buy, and if that checks the box, schedule that consultation and get with the lender that you know, like, and trust, so you guys can strategize and put a plan together to see if this one plus is something that you can take advantage of. Okay? So now let's move forward to the purchase plus. So one plus, anywhere, no first-time home buyer requirement, maximum loan amount $350, 2% grant in the form of down payment or closing costs, whatever, it's going to be subtracted, right? No PMI. The lender's paying for it, okay? No PMI, the lender's paying for it. You could use border income if you meet the test that I just went over. So very affordable. That's what affordability is, okay? Now, let's talk about the purchase plus. And what's exciting about this is the last time this program came out, there were only certain cities that were on it. Well, it's been updated, and the scope has been open to a lot more people. But here's the deal. It's another grant, free money, gratis, If you qualify, here's the deal. I'm going to go with the left side first. Here's the deal. You can get up to $5,250 as a grant, free money. Doesn't have to be repaid. There's no time limit on it. And it could be used for your down payment and or closing costs. Okay. You also get up to a $500 credit for first-time home buyer education. If you take it, right, you can get that credit, get it back to you. If you're buying a home and there's no appraisal waiver, you get a $500 credit towards your appraisal. And then if you're buying a property, foreclosed property from HomePath, okay, and you have to use an outside title company for a title policy, you get up to $1,000 credit there. Okay. They're doing everything that they can, man, to help you get into a home. That's why you got to watch who you have in your algorithm. Because if you're listening to the wrong people, you're going to miss your opportunity. I digress. 1 unit primary resident, okay. The max loan to value is 97%. Stated another way, 3% is the down payment, okay. There's no minimum contribution. Again, the closing costs and things of that nature could come from somebody else. There's no minimum contribution. Now, in this program, you can buy 2 to 4 units. You can buy 2 to 4 units opposed to the 1+, right, where it's just the single family residence. But here, you can look at a duplex, okay, triplex or fourplex, okay. Now, if your loan to value is less than 80%, okay, then you're required, not less than, I should have put greater than. If it's greater than 80%, okay, you're required to have a 3% minimum contribution. If it's less than 80%, then there's no minimum contribution required. But again, kind of getting beyond the scope here, because if you got the ability to put down the monies and things of that nature, this program may not be the one for you. But if you do, you might want to look at it, right? Now, what else? Again, non-occupant co-borrowers, okay? LTV's got to be greater than or less than or equal to 95%. We can't go to the 97 or the 3% down. It's got to go to the 5% down, right? So the loan amount has to be at 95% or less, okay, in order to have a non-occupant co-borrower. And then there's no minimum client contribution. It's stated twice there, right? There's no minimum income limits on this one. Now, income limits just were raised. It's like $700,000+ on a conventional side. So again, they're opening up the scope, adding some money for down payment and closing costs to help you get in, credits for appraisals and things of that nature, right? And interest rates look very, very handsome as of the recording of this video. They're not in the 8s, right? Now, manufactured homes are allowed. Maximum loan to value is 95%. We could use that border income again. Won't bore you with the explanation. And then the minimum credit scores are 620. Now, here are some of the limitations. You must be a first-time home buyer in order to do the Purchase Plus. 1+, no first-time home buyer requirement. But for this one, you must be a first-time home buyer. Haven't had a home in the most recent 3 years. There's a couple of caveats that might get you out of that if you were in that situation. The one that comes to mind, if you're a spouse and there was a divorce and you're not the primary and you're having to go create another home, then probably could get you out of that situation. But here's the deal. This is why this one is very, very exciting to me, aside from the additional metropolitan statistical area cities that they've opened up. But it says you must live within the approved area at the time of application. What that means is there is census tracts that are associated with the eligible cities there that you see on your screen. Now, at the time that you are looking to buy this home, you have to live in that area. That's what qualifies you. So let's say you're in an apartment complex. Let's say you're in an area that you don't necessarily want to live in. As long as you're in that area or buy in, let me say that, let me restate that. You're not in the area that you want to purchase a home in, but at the time of the application, you live in one of the qualified census tracts, that's what qualifies you. So now, if you're in an apartment complex or if you're renting somewhere, all we have to do is prove that you're in that census tract. And then once we make that approval or that show that proof that you live there, now you could buy anywhere in the country. Hear what I'm saying? So you don't have to buy in the area that you're currently in. You have to, what qualifies you in the census tract, the eligible or the approved census tract, is where you live at that time, right? So there's a couple of things that we can use to prove that, hey, you live there. Again, driver's license, right? Utility bills, things of that nature to prove, hey, I live in a qualified census tract, but I want to buy elsewhere. That's huge because you might need to move further out in order to find more affordable options for you. But you can still take this product with you. Excellent opportunity. I apologize for hitting the mic. So, single family resident, owner occupied only. Okay. And when I say single family owner occupied only, meaning even in the, I should say state owner occupied only, owner occupied. Because above you can get a 2 to 4 unit if the numbers work. But for the most part, we're talking about single family residences. And regardless of 1 to 4, one of them has to be your primary residence. That's what I'm saying there. Okay. You cannot own other property. So if you have another property like in the 1+ where you're vacating and going to keep it, then you're not a first-time home buyer because you've had ownership within the most recent 3 years. So that's what this one is on the Purchase Plus. You cannot have ownership within the most recent 3 years, then you're not a first, because if you do, then you would not be a first-time home buyer. Okay. And then as we wrap it up, it says home buyer education will be mandatory for all first-time home buyers. Okay. So you got to have the down payment, not the down payment, but the home buyer education course. Nothing too heavy. A lot of times you could do it online. We have sources for you. But as I wrap this up, this Purchase Plus, look at all the places, man. And I try to separate and kind of give geographical areas. You know, we kind of got in the Chicago, Cleveland, Detroit area. Okay. The DC, More, Philly, New York. We got the, middle of the country, if you will, Memphis, St. Louis, Oklahoma City is new. Texas, man. Texas opened all the way up. Okay. Real excited about Texas because there's a lot of folks that could be helped with this product. Okay. And then over in the Southeast, if you will, the ATI, Atlanta, Sandy Springs, Roswell, you see it on the screen. I don't have to read to you. The Florida MSAs that are qualified now with this type of situation. So guys, ladies and gentlemen, the way you find out if you're in a qualified census tract, there's another tool that is provided here by the United States Census Bureau. And there's actually a database of the census tracts so you can find out if you are eligible. If you'd like to know and you want to move forward, reach out, man. Reach out. Now is a great time to schedule a consultation. Okay, schedule a consultation. You can hit the link tree. All right. You can send me a direct message on whatever platform you're listening or watching on. And don't forget to subscribe in whatever manner that looks like on whatever platform that you're watching on, because we're on several platforms. So, there you have it, man. We can no longer say that there aren't options. And these are just a couple. The next time I come on, we'll be talking about 100% FHA option as far as purchases are concerned, and some refinance options for those of you that have excellent first interest rate positions, but you might want to tackle the credit card balances that, the numbers show are growing in the form of HELOCs and things of that nature. But today, conventional, 1+, Purchase Plus, 2 great options for anyone looking to get on the property ladder. We lend nationwide, all 50 states. If you would like to get more information about you and your situation. Again, there it is, guys. I'll leave that up as we get ready to roll out. Enjoy your weekend. Enjoy your family, man. Life is short. Tomorrow's not promised. Today is all you got. So while you got it, take advantage. And if this is something that you've been looking to do, the next step is schedule a consultation. Let's talk with one another. Let's have a meeting of the minds to see if we can move forward together. And if so, I would love the opportunity to help you achieve your home ownership goals in 2024. Y'all be blessed.